I think oftentimes it's a mindset because people are very used to taking $1,000 investing into their brokerage account, right?
They're looking to reduce their taxes. They grow, their businesses grow, economy in their business.
I am a client of GOCPA.
They've grown, we've grown.
Weren't paying much interest. One of our clients sells their company.
I've recommended dozens of people to them.
Our goal is to use advanced tax planning to reduce taxes, optimize tax savings, and reinvest them into the future so you can get ahead in your wealth.
Welcome. So today we have a special guest. We have Barry Brooksby, founder of Focus Wealth Group. Barry is out of Utah. So John and I have worked with Barry for many years now, both personally and professionally. Barry is a master of something that is called infinite banking. So something that we've talked a lot about. We've talked about in different tax planning videos. So this is something we want to explore more in depth with someone who practices it full time. So with that, we want to turn over to Barry to give a brief introduction and what we're going to talk about today.
Fantastic. Good to be with you guys. You know, one of the things that I like to share is 22 years ago, I was putting people in the stock market, mutual funds, IRAs, and about a year of that, I got tired of the calls from clients saying, hey, why am I not making money? Why am I losing money? What happened to these double-digit returns you told me we were going to get? And I was so new in the business, I didn't know what to tell them. But I wanted my clients to sleep well at night. I wanted to sleep well at night. So I got on this discovery, this path of discovery. And that's when I came across real estate investing and high cash value whole life insurance, which we're going to talk about today, called infinite banking. So here I am 22 years later. I'm one of the foremost experts in the country on infinite banking. And I teach clients three primary things. Number one, how to grow your money guaranteed, how to have access to liquid cash, and three, how to grow money tax-free. The more tax-free money we have in our portfolio in the future, the happier we're going to be because taxes are going to keep going up. So I love to help people grow money, have more peace of mind and security in their portfolios. And I work with clients all over the country. So I appreciate you guys having me.
Absolutely. Yeah. And Barry, one thing we've seen success with, particularly you mentioned real estate investor clients, having a bucket and a pool to keep capital on the sidelines. Now, now in 2022 with this inflationary environment, our belief is it's more important than ever to have a tool on your side to protect against inflation. Now, no one knows what the real rate of inflation is, but what we do know is that keeping money in checking accounts and savings accounts is going to erode. So this is why we particularly like something like this, is that you do have this bucket where you can keep cash on the sidelines, waiting for that next deal to pop, but you don't have to worry so much about the erosion of inflation. So that's definitely a great benefit here. Now, Barry, to kick off, I think one thing to define right away is, what is infinite banking? I think a lot of times people hear these different terms. They've heard Rockefeller banking, cash flow banking, right? A lot of trade names out there. So at its, the highest level, what is it and what is it not?
Yeah, very good. I'll run you through a couple of slides. So the idea is Nelson Nash created this in the 80s, and it is using a uniquely designed, properly structured whole life cash value policy. It must be whole life insurance because there are fixed costs in whole life. We don't use universal life or indexed universal life because those policies have increasing costs. We want fixed costs so we know that our money isn't going to erode. And it must be with the participating dividend-paying mutual life insurance companies. The companies I use as an independent advisor, they've been in business 145 years plus. These companies aren't going anywhere. They've been through the world wars, the Great Depression. They're very good at what they do, and they pay dividends. So we earn their profits coming back to us in the form of a dividend. It's a way for people to become their own bank by taking control of the banking functions in their lives. I mentioned the stock market earlier. It's interesting that in the stock market, you relinquish control, right? I mean, there's volatility, there's fees, there's tax deferral, but ultimately you're out of control. In an infinite banking policy, you have control. And when you have a guaranteed rate of return and you know what you're going to earn, not only do you have control, but you're going to have peace of mind. So there was a book that Nelson wrote called Becoming Your Own Banker. It was published in 2008. I highly recommend all of your clients get a copy. Go to Google, go to Nelson's site. By the way, I am an authorized Nelson Nash Infinite Banking practitioner. So my name's there on his website. And the idea is, you mentioned it is known as all these other plans: cash flow banking, family banking, private banking, a bunch of other different plans. But the idea is to grow cash value as rapidly as possible. See, in traditional whole life insurance, which what most agents sell, they're just focused on death benefit. That's all they want to sell, is a lot of death benefit. But in these plans, we minimize the death benefit and we maximize the cash value. So yes, you're going to get some death benefit for legacy planning and estate planning. You can use death benefit as a collateral assignment as a real estate investor, but ultimately we want high cash value. So we reduce the commissions, we reduce the death benefit, we keep the costs very low, but overfund cash value to get that growing as rapidly as possible.
That's a great overview there, Barry. And I think one thing we often mention to clients is like, how does this relate to the tax world? And we always say is, when we say overfund, right, back in, I believe it was probably the 80s or something like that, they put these MEC limits in place, modified endowment contract limits, to limit, right, to limit how much you can put in there. But someone like Barry, his job and his role in designing this is to make sure that we can push up bread against that, right? So you want to push up bread against the line of how much the IRS allows your particular situation to fund into these, right? Again, if these are not designed properly, you're going to leave a gap there, otherwise not maximizing your benefits. So that's something we always like to talk to people about is, hey, you do want to fund these and fund them right up to your limit to get your maximum benefit.
Totally.
Yeah, and Barry, just to clarify too, or just to confirm, these policies are whole life policies, but they're just uniquely designed, and you need to partner with someone like yourself who knows how to design these policies in order to put them into practice. Correct?
That's correct. If you go to your local guy, chances are you're going to get sold a traditional whole life policy that takes 20 to 25 years to grow cash value, and you would have been oversold and bought a lot of life insurance death benefit.
Gotcha. And then one of the questions that we get too from our clients is, the guaranteed rate of return. And you mentioned that these mutual insurance companies have withstood basically the test of time and wars and everything. And is that really the core reason why there's a guaranteed rate of return that is nothing to bat an eyelash at?
Right. Having a guaranteed means you're earning true compound interest. It's funny because you'll hear financial advisors talk about compound interest, but if you're in an investment that has volatility, you can't have true compounding. True compounding can only come about with a guarantee. Well, the insurance companies do primarily two things. Number one, they use what's called actuarial science. They know, based on the law of large numbers, how many people will pass away in a given year. And based on that science, they know what they can guarantee. Two, they also invest heavily in guaranteed corporate bonds. These are bonds that they purchase in the $1 million tranches. They're not buying bonds like you and I buy. They're getting a guarantee, and they hold these bonds for 10, 20, 30 years. So we're very well established with these companies because they're established. And then in addition to the guarantee, John, they pay a dividend. So you get the guaranteed return and you get a dividend that's paid annually on top of that, both growing tax-free if done correctly. And then you have the ability to take policy loans, to use that cash to go buy more real estate,